Hello, hi guys. This is CA Balakrishna Kovuru. How are you? Hope you people are doing well. Even I am fantastic. So, in the today's class, we will be revising our next chapter, which is CARO 2020. See, this discussion of CARO 2020, which we are going to make, it is applicable both for CA inter students as well as for CA final level students. CARO won't change whether CA inter or CA final. Okay, so as you already know, there are 21 clauses in CARO, right? So first of all, CARO is a additional reporting responsibility which you will give as annexure to the audit report, right? Now this CARO, it is not applicable to all the companies. There are certain exceptions from applicability of CARO. First of all, we will see what is the applicability of CARO. So if you see, CARO, it is applicable for every company, including a foreign company. Foreign company is a company which is incorporated outside India but having a place of in India. That means even for a foreign company also, this CARO is applicable, except following. That means for the following companies, the CARO is not applicable. What are they? Firstly, for the banking company, insurance company, Section 8 company, one-person company. So in case of banking company, insurance company, the regulatory requirements are even more stricter. So the reporting requirements that are there in CARO, they are already there for banking and insurance company as per their own respective laws. So for these two, CARO is exempted. And Section 8 company, one-person company, these are some small companies, right? Section 8 company, it is incorporated for charitable purposes. So to encourage them, government has reduced the reporting burden on them. So for Section 8 company, CARO is not applicable. Even the one-person company is also only one director will be there. To reduce the reporting burden, the CARO is not applicable. Next, small company. Even for small company, CARO is not applicable. Now, what is meant by small company? Small company is a private company whose paid up share capital is less than 4 crore and turnover is less than 40 crore. If these two conditions are satisfied, you will call it as a small company, and for small company, CARO is not applicable. Next, coming to private companies. For private companies, CARO is applicable, but however, if the private company is falling in this threshold, then private company can claim exemption from applicability of CARO. So what is this? What is this exemption for private limited company? First of all, private limited company, in order to claim the exemption, it should not be holding company or subsidiary company of another public company. Got it? See, private limited company not being subsidiary holding company of a public company. If private limited company is holding or subsidiary of a public company, then for the private limited company, CARO will be applicable even if it satisfies these criteria. Now what are the criteria? So for private limited company, in order to claim exemption, following criteria should be satisfied. First of all, paid up share capital and reserves and surplus should be less than or equal to 1 crore rupees, and you should observe here it is and borrowings is less than or equal to 1 crore rupees. Turnover is also less than or equal to 10 crore rupees. If all these conditions together are satisfied, then private limited can claim exemption from applicability of CARO. Got it? Next, this paid up share capital and reserves and surplus, this you need to see as at the end of the current financial year for which you are checking the applicability of CARO. And borrowings is there, na? This borrowings you need to see at any point of time, not as at the balance sheet date. So during the year, at any point of time, if borrowing crosses 1 crore, then CARO gets applicable, and turnover is less than or equal to 10 crore rupees. If all these three conditions are satisfied, you can claim exemption from CARO. Got it? Next, this CARO, it is applicable to standalone financial statements. In case of consolidated financial statements, even for consolidated financial statements also, auditor needs to give audit report, right? So in case of audit of consolidated financial statements, CARO is not applicable except clause 1. See here, you can see that note, CARO 2020 is not applicable to consolidated financial statements except clause 21. Got it? This is with respect to applicability of CARO. Now we will go through all the clauses of CARO one by one. So first clause, it is related to PP, property, plant and equipment. There are basically 5 sub clauses in this first clause. Let us see what are the one by one. First of all, auditor needs to see whether company has maintained proper records of PPE, including both tangible as well as intangible. So whether proper records are made or not, that will be reported by the auditor. Next, whether this PPE has been physically verified by the management at proper intervals or not. So that auditor will report. If management is not physically verifying PPE at periodic intervals, then auditor will report it here. Next, coming to immovable property. The title deeds of immovable property should be in the name of the company, because if immovable property is shown in the balance sheet, in the books of accounts, the title, the in the title deed, the company should be owner, correct or not? So that is the third thing that the auditor will see with respect to PPE clause 1. If at all the title deeds are not in the name of company with respect to immovable property like land or building, then auditor will report it here. Next, whether company has revalued its assets. Now company, it can revalue its assets, right? So if at all it has revalued its assets, then the revaluation should be based on a certificate of valuation given by registered valuer, that auditor needs to see. And if in case because of revaluation, change in the value is more than 10% each class wise, okay, class of asset means like plant and machinery is one class, land and building is one class, like this there will be different classes of assets. So because of revaluation, if increase in the value of asset is more than 10%, you should see this not individual asset wise but class wise, because in each class there could be various assets. Got it? Now if total class taken together the change is 10% or more, then auditor will report. Okay, see, specify the amount if change is 10% or more, each class of PPE wise you need to see. Got it? Not the fixed asset wise but the class wise you need to see. Next, the auditor will report whether there are any proceedings that are initiated or pending against the company as per prohibition of Binomi Property Transaction Act. If there are no proceedings against the company, then auditor will say that no, there are no proceedings against the company as per prohibition of Binomi Property Transaction Act. Got it? These are the 5 points that the auditor will report as per clause 1 of CARO 2020. Next, moving to clause 2, which is inventory. Now here with respect to inventory also, auditor will see whether physical verification of inventory has been done by the management at reasonable intervals, and during such physical verification, if any discrepancy of 10% or more in aggregate for each class of inventory were noticed, then also auditor will see whether they have been properly dealt in the books of accounts or not. Now here also if you see, they are saying class of inventory wise. Now for the inventory class means, see, for fixed assets, class of assets will be like uh, plant and machinery, land and building, furniture and fixtures, these will be class of fixed assets. Similarly for inventory, class of inventory will be raw material, work in progress, finished goods, right? Like this, if there is any discrepancy between book value and physical value, okay, book value, physical value, if difference between book value and physical value is more than 10%, that too class wise, not total inventory, you need to see. Okay, you should not see the total inventory difference, no, class wise difference you need to see. So if class wise difference is more than 10%, auditor should ask the management to properly account it in the books of accounts. Got it? If it is not properly accounted, of course auditor will report it here. Got it? Yes. Next, so that is the first point under clause 2. Now coming to the second point, auditor needs to see whether during the year company has been granted a working capital limit of 5 crores or more based on security of its current assets. If at all working capital of more than 5 crores has been sanctioned to the company during the year, auditor needs to see See, for working capital, the company will give stock statement, debtor statement on a quarterly basis to the bank. So whether the amount of stock, amount of debtors shown in this stock statement and debtor statement that the company gives to the bank, is it matching with the books of accounts or not? That auditor needs to report as per the second subclause of clause 2 with respect to inventory. Understood? Got it? Yes. Next, coming to clause 3. Now this clause 3 deals with investments, loans, guarantees, securities. See, investments made by the company, loans given by the company, not taken by the company, guarantees and securities also given by the company. So with respect to loans, guarantees, investments made or given by the company, clause 3 reporting will deal with. Got it? Now let's see what the auditor needs to report. So whether, what happened, yeah, whether during the year company has provided any loans, guarantees or securities to any other entity. In such a situation, auditor needs to report in clause 3 of CARO aggregate amount that has been given during the year. Okay, during the year, how much of aggregate amount you have given and what is the outstanding balance as at the balance sheet date. Because in the previous years also you might have given loan, all that accumulated after reducing the repayments, what is the outstanding balance as on balance sheet date, that you need to report. And also what is the fresh amount of loan or investment that you have made during the year, that also you need to report. See, aggregate amount during the year and balance outstanding as at the balance sheet date with respect to such loans and advances, guarantees or securities given to subsidiaries, associates and joint ventures. So you need to separately show how much loan or advance you given to subsidiary, how much loan advance given to associate, how much loan advance given to joint venture, and how much is given to others. Okay, this way you need to report. And also how much is given in current year and how much is the outstanding balance. So in this manner you need to present, you need to report in this clause 3 first subclause. Next, second point that the auditor needs to report is whether investment made by guarantees, whether investments made, guarantees provided, securities given are not prejudicial to the interest of the entity. See, the terms and conditions of loans that the company gives, it should not create loss to the entity. Let's say, for example, in the industry, in the market, the general rate of interest is 12% for any loan, but company has given loan to one of its subsidiary at just 3% rate of interest. Is this prejudicial to the interest of the company or not? Yes. So auditor needs to report any loans, advances, investments made where the terms and conditions are prejudicial to the interest of the company. Got it? Next, next one, in respect of loans and advances, whether schedule of repayment of principal and payment of interest has been stipulated, and whether the repayments are regular. See, if you take any loan from the bank, generally there will be schedule of repayment, correct or not? In the same way, for the loans that the company has given, whether there is a schedule of repayment, like on which date the EMI amount will be received by the company. Like this, schedule of repayment should be there. And also there should be a proper realization of amount on a regular basis. These two things auditor needs to report. If at all the amount is not received on a regular basis, then auditor will report it. Next, state total amount overdue for more than 90 days and whether reasonable steps have been taken by the company to recover that amount. See, the company has given some loan to some person, and if that person has not repaid the EMI or installment amount for a period of more than 90 months, that needs to be specifically reported by auditor in this clause. And auditor should also report whether company is taking proper steps to recover that amount. Got it? Yes. Next, auditor should also report whether any loan or advance which has fallen due during the year has been renewed or extended. See, during the year, the borrower has to repay the amount to the company. So, due date is falling during this year. But what company has done is, let's say 2 crore amount has to be repaid by the borrower to the company. But company, in order to repay this loan by the borrower, it has issued fresh 2 crore loan to the borrower, or it has renewed the existing loan. So due date is today na, you don't repay it today, you take some more 2 years, like this you have renewed the existing loan or given fresh loan to repay the existing loan. In such a situation we will call this as evergreening of loans. So if at all any evergreening of loans happens, auditor needs to report it. So in this evergreening, auditor needs to report aggregate amount of such dues renewed or extended or settled by fresh loan. So how much amount of loan is evergreened, that is fresh loan granted to repay it, or its due date extended, and percentage of aggregate to the total loans or advances granted during the year. Now during the year, let's say company has granted total loans of some 15 crores. Of these 15 crores, some 3 crore loan belongs to evergreening. That means some 3 crore loan has to be repaid by the borrower in the current year, but the company has issued fresh loan to repay that existing loan. So such type of loans that the company has given is 3 crore out of the total 15 crore. Now how much percentage it comes? So 3 by 15 into 100. So how much percentage is the evergreen loans? That also you need to report. Understood? Yes. Next, whether company has granted any loans or advances repayable on demand. Repayable on demand means whenever the company asks, that borrower has to repay. There is no fixed tenure for repayment of loan. Such loans are known as demand loans, or any loans where there are no terms and conditions with respect to repayment. So if the company has given any such demand loans or any loans for which there is no stipulated terms and conditions, the auditor needs to specify aggregate amount of such loans without terms and conditions, or aggregate amount of such demand loans, and percentage thereof to the total loans granted. So of the total loans that the company has granted, how much is that demand loan, how much is that loan which is without proper terms and conditions. Got it? So these are the points that you will report as per clause 3. Yes. Next, moving to clause number 4, right? So clause 4 deals with section 185 and 186. See, as per section 185 and 186 of Companies Act, whenever company wants to give any loan to its directors, or whenever company wants to make any investment, then it needs to follow certain conditions, like some special resolution is required, and there can be maximum cap of the amount that you can give as a loan to directors. So that is specified in section 185 and 186. So as per clause 4, auditor needs to report in respect of loans, investments, guarantees and securities, whether the provisions of section 185 and 186 have been complied or not. Understood? Yes. Next, clause 5, with respect to deposits. Now with respect to deposits that the company accepts, now deposit, it is a type of borrowing for the company. See, whenever company wants to raise funds, it can raise funds either in the form of equity share. By giving equity share, it can take money from the public, or by borrowing from the bank, that is another source, or by issuing debentures to the public. Another source is deposits. So the company can accept deposits from the public. This is also one of the source for the company. Now deposits become liability for the company. Now with respect to the deposits, the company needs to comply with three things. First one, RBI will issue various directives with respect to the deposits that the company accepts. So the company should comply with all the directives issued by RBI. Next, with respect to deposits, in Companies Act, there is a section number 73 to 76. So all those sections that are dealing with the deposits should be complied by the company. Next, if any order is passed by company law board, national company law tribunal, or any court, that order should also be complied by the company with respect to deposits. Got it? Understood? Yes. So that was clause number 5. Now moving to clause number 6. So clause 6, cost records. Whether maintenance of cost records has been specified by central government. Generally, central government, it will ask some companies to maintain cost records. Certain regulated sectors like telecom industry, electricity generating companies, or sugar manufacturing companies. So some companies, they need to be mandatorily maintain cost records as per section 148 subsection 1. So auditor, he will report whether cost records have been maintained or not. See, this is not speaking about cost audit. In CARO, you will never report about cost audit. You will just report whether cost records are required, if required, whether cost records have been maintained by that company or not. This is the only thing that you will report. Got it? Yes. Next, moving to clause number 7, which is statutory dues. Some of the examples for statutory dues: ESI, PF, income tax, GST, TDS. All these are some of the examples for statutory dues. Now, statutory dues, you can bifurcate it into two: undisputed statutory dues, disputed statutory dues. Undisputed statutory dues means there is no dispute with respect to such a statutory due between the government and the company. That is known as undisputed statutory due, which will be dealt by clause 7 subclause A. Now, if at all there is any undisputed statutory due which the company has not paid for a period of more than 6 months as on the balance sheet date, that should be reported by the auditor under subclause A. So this is a 31st March balance sheet date. So as on balance sheet date, there is some outstanding 2 crore of income tax or any other statutory due like GST or ESI, PF, any some amount of statutory due, 2 crore is there. Now the due date of this 2 crore is falling before 31st, before 30 September. So the due date of this 2 crore is before 30 September. So if the due date is before 30 September means as on the balance sheet date, it is being outstanding for more than 6 months. Correct or not? So such a type of statutory dues which are outstanding as on balance sheet date for a period more than 6 months should be reported by the auditor under subclause A, clause 7. Got it? Now let's say for example this 2 crore this 2 crore statutory due, let's say for example the auditor is giving his audit report for this financial year on some 10th of June 20, okay, irrelevant of the year, on 10th of June he is giving his audit report. Now if let's say for example this 2 crore which is outstanding as on balance sheet date for a more than 6 months is paid by the company on 4th April, that is before the audit date report, it has paid off. In this situation also, even if a company has paid that due after 31st March, you need to report because it is outstanding as on 31st March. Got it? Yes. Next, with respect to disputed statutory due, that means government is saying that you have to pay 10 lakh rupees, but the company is saying that no, my liability is only 5 lakh rupees. Like this, there is a dispute going on between company and the government, that becomes a disputed statutory due. So in case of disputed statutory due, auditor needs to report with which authority that dispute is pending, that is with which forum that dispute is pending, and what is the amount involved in such a dispute. Got it? That has to be reported. Next, clause number 8, which is undisclosed. Just a second. Yes, clause number 8, which is undisclosed income. Now what is this undisclosed income? Generally income tax department will come up with some scheme every once in 3 years or 4 years, it will come up with a scheme known as disclosure of undisclosed income. That means in the past, if the assessee has not disclosed his income in the income tax return, now the income tax department is giving a chance to the assessee to disclose his undisclosed income under this disclosure of undisclosed income scheme. Okay, fine. Now the company has disclosed the income that is not disclosed earlier in this scheme. So let's say, for example, income related to 2020 to 2021, this financial year is disclosed in the financial year 2024-2025. So this income is disclosed in this year. In such a situation, okay, you have disclosed to the income tax department and you have paid off the income tax. But what about books of accounts? Auditor has to check whether that income that is disclosed in the current year is properly accounted for in the books of accounts or not. Got it? Yes. Next, clause number 9, which deals with loans and advances taken by the company. See, clause 3 deals with loans to advances given by the company. Clause 9 deals with loans to advances taken by the company. Understood? See, so now the first subclause with respect to clause number 9, whether company has defaulted in repayment of loans or borrowings or interest thereon to any lender. So the loan that the company has taken, whether it has defaulted in repayment of either principal or interest. If there is a default, you will the auditor will report under this CARO. Got it? Next, whether company is declared as a willful defaulter, like Vijay Mallya, Nirav Modi, right? So like this, whether the company is declared by the bank or financial institution as a willful defaulter. In such a situation, auditor will say in this clause that this company is a willful defaulter. Next, whether term loans were applied for the purpose for which loans were taken. See, when you are taking the term loan, you will take the term loan by specifying the reason that I will use this term loan for so and so purpose. If you don't use that term loan for that purpose, auditor will report here. Next, whether the funds raised on short term basis or used for long term basis. See, if you have taken working capital loan is a short term loan. You should use it only for the short term purposes, but not for the long term purposes. If in case you use short term loans for long term purposes, auditor will report here in this clause. Got it? Yes. Next, whether company has taken any funds from any entity or person to meet the obligation of its subsidiary, associate, or joint venture. So if the company has taken any loan and it is meeting the requirements of his subsidiary, joint venture, or associate with that loan, then auditor will report it here. Next, whether company has raised loans during the year by pledging the shares of its subsidiary or joint venture, that also auditor will report in clause number 9. Yes. Next, clause number 10. So clause number 10 deals with whether the amount raised through IPO and FPO, it is utilized for the purpose for which it was raised, that is end use of funds. Similarly, whether amount raised through private placement, preferential placement, whether that amount also is used for the purpose for which it is raised or not. And with respect to private placement and preferential allotment, there is section 42 and section 62 of Companies Act that needs to be complied. So you will also report whether that is complied or not. Next, moving to clause number 11, which deals with fraud. Basically, the reporting with respect to fraud is there in clause 11 of CARO 2020 and also section 143 subsection 12 of Companies Act. So as per clause 11, auditor reports any fraud that is conducted by the company or any fraud that is happened on the company. Both things will be reported by auditor here in section 140, here in clause number 11. But in section 143 subsection 11, only frauds on the company by employees or officers will be reported. Understood? Yes. And in case of that section 143 subsection 12, reporting will be made to audit committee or board of directors if amount involved in fraud is less than 1 crore rupees. If amount involved in fraud is more than 1 crore rupees, reporting will be made to central government in the form ADT4 in that section 143 subsection 12. Now, if in case any report is given to central government in ADT4 because the fraud is more than 1 crore rupees, auditor should say that here also in second subclause of clause 11, that during the year I have given form ADT4 to central government because a fraud has occurred on the company exceeding value 1 crore rupees. Understood? Next, auditor should also report whether he has considered whistleblower complaint. See, whistleblower is basically a mechanism that will be there in the company to handle the complaints that comes from the employees. Understood? Yes. Next, clause number 12. So this clause 12, it is related to Nidhi companies. Here you will see three things: whether Nidhi company is maintaining net own fund to deposit ratio of 1:20. That is the first thing you will see. Next thing you will see is whether Nidhi company is maintaining 10% unencumbered term deposits or not. Yes, unencumbered term deposits 10% should be maintained. Next, whether there has been any default in payment of deposits that the Nidhi company has accepted. These 3 points you will report in clause 12. Next, clause 13 with respect to related parties, the auditor will report whether section 177 and 188 with respect to related party has been complied or not. Next section, clause number 14, which deals with internal audit. See, here auditor will report whether the internal audit in the company is incommensurate with the size of the company. Taking into consideration size of the company, is the internal audit is sufficient for the company. That is the first point you will see. The auditor will report. Next, auditor will also report whether he has considered the internal audit reports that the internal auditor has given. See, during the year, internal auditor will give 4 internal audit reports, one for every quarter. So those internal auditors reports should be considered by statutory auditor during his final audit. Understood? That is clause 14. Next, clause 15 with respect to non-cash transactions. Non-cash transaction is nothing but a barter. So if any non-cash transaction takes place with company and director, then requirement of section 192 has to be complied. Whether the requirement of section 192 is complied or not, auditor will report it here. Next, clause 16 with respect to NBFC. Now with respect to NBFC, in order to start a business of NBFC, you need to obtain certificate of registration from RBI. So auditor will report whether this NBFC has obtained certificate of registration from RBI or not. Next, that is the first point. Second point, the auditor will report whether this company is doing business of NBFC or business of housing finance without obtaining certificate of registration from RBI. That is the second point that will be reported. Next, whether if in case the company is a core investment company, then in case of a core investment company, to treat it as core investment company, it needs to satisfy certain criteria given by RBI. Whether such criteria is being satisfied by this company or not, you will see if at all it is a core investment company. And in case the group of companies is having more than one core investment company, you will state the fact that this group is having more than one core investment company. How many core investments company are there, you will specify. Understood? That is clause 16. Next, clause 17. So if the company had made any cash losses during the current year or during the preceding financial year, you will mention. Cash losses means you will take profit or loss that is generated as per profit and loss statement, and you will reduce and add back all the non-cash items. Okay, so you will get a cash loss. Understood? So if there is any cash loss, net cash loss during the current year or during the preceding financial year, you have to report it. Next, clause 18, resignation of auditor. In case the auditor has resigned and a new auditor is appointed, then incoming auditor has to communicate with the resignation auditor about why he is being resigned. Understood? That is the clause 18. Auditor will report whether he has communicated with the resigning auditor and he has considered the reasons and objections raised by resigning auditor or not. Next, clause number 19, which related to going concern. Simple. So based on all the information that I have obtained and based on my audit, whether I feel that this company is going concern or not, auditor will report in clause number 19. Understood? Yes. Next, clause number 20, which is about unspent CSRs, that is corporate social responsibility. So certain companies, they are having a mandatory requirement to spend 2% of their profit for the purpose of, for the benefit of society. Now this amount is there, that has to be generally spent within 6 months from the end of the financial year. If at all you fail to spend that amount within 6 months from the end of financial year, you have to deposit this amount in investor education and protection fund. So that amount has to be deposited within 6 months from the end of the financial year. So whether the unspent CSR is deposited within 6 months from the end of financial year in that investor education and protection fund or not, auditor will report in this first subclause. Next subclause, if there is any ongoing project, like the company is, let's say, constructing a school building, it is spending CSR amount for the purpose of free education, so it is constructing a school building. Now for constructing school building, it is taking, let's say, 2 years. So you cannot complete school building within 6 months from the end of financial year. So in such a situation, if you are spending the amount on any ongoing project, in such a situation you have to keep that amount in a separate bank account. So auditor will see whether funds utilized for, that are being utilized for separate project, are being kept in a separate bank account and utilized from that bank account or not. That you will report with respect to CSR, corporate social responsibility. Next, clause number 21, it is applicable only for the consolidated financial statements. See, in case of audit report of consolidated financial statements, you will give CARO. In that CARO that you give on consolidated financial statements, all the first 20 clauses will not be there. Only clause number 21 will be there. And in this clause number 21, what you will report is, let's say for example, A Limited. A Limited is having some subsidiaries, subsidiary 1, subsidiary 2. Now, for this subsidiary, CARO report would have been prepared. For this subsidiary also, CARO report would have been prepared. And A Limited now preparing CFS. In this CFS, clause 21 will be given. So, in this clause 21, let's say, in the subsidiaries CARO, any clause has been negatively reported, negative remark is there, you will give only that negative remark clause in this clause 21 that you will give in the consolidated financial statements. Understanding? So let's say for example in subsidiary 1, CARO, clause 5 and clause 10 have been negatively reported. So here auditor of consolidated financial statements, in CARO of consolidated financial statements under clause 21, he will say subsidiary 1, clause 5 so and so negatively reported, clause 10 so and so negatively reported. Next in subsidiary 2, clause 3 negatively reported and clause 7 negatively reported. You will say subsidiary 2, clause 3 negatively reported, clause 7 negatively reported. That clause you will copy and paste here in the consolidated financial statement, clause 21. That is the reason why clause 21 is applicable only for the CARO report of CFS, but not CARO report of standalone financial statements. Understood? So this is the entire discussion of CARO 2020. So that's it for today. I'll be winding up this session. We'll meet in the next class with a revision of a new chapter. Until then, take care. Bye bye. See you.